So Bitcoin's hit this like boring, almost depressing sideways motion. It's like we're in that phase now where there's little interest in the market. There is Bitcoin's at 48,000. It keeps trying to break up into the 50,000 territory, and it gets declined. It gets rejected, and the questions are popping up on people's minds. Like, is this the beginning of a bear market? Was that the end of the bull market? Today, I'm going to show you why I think that the bull market is very much intact, and why the bear market has been cancelled. So stay tuned until the end. We're also going to be doing some huge giveaways today. Amazing, amazing giveaways. 1, 2, 3. Let's watch the Twitch, guys. Let's go, Kyle.
He's all about the DJ, baby. Crypto man. He's all about the DJ, baby. Uncle Ren's in charge. He's a crypto star. So savvy what he say. Fast money like a sports car. He's all about the DJ life. Make some money, change your wife. Big calls on the old coins for the bull market hype. He's all about the DJ, baby. Crypto man. 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 Crypto man ran. Crypto banter. You got crypto questions, they got crypto answers. Jean-Claude Van Damme of the Banter fam, could he kick it? Yes he can. Can he kick it? Yes he can. Crypto man ran. He's all about the DJ, baby. Crypto man ran. He's all about the DJ, baby. Crypto man.
Welcome back, guys. I'm Crypto Man Ran. You know, guys, there is a new Sheldon song. Okay, and now let me tell you, like, it's hot. I wouldn't say it if Sheldon was here, but the new Sheldon song is super, super, super hot. In fact, do you think we could get it uploaded today?
Yes.
Okay, so we're gonna upload it. Okay, so we're gonna upload it onto this thing, and you guys can hear the new Sheldino Tantino song. It's bloody good. I actually don't think he's heard it yet. It was sent to me, and I sent it to the video guys to get some videos. Fred.
I can't help it.
Every Monday, bro. Hold on. Yeah, Fred. Yeah, bro. Just a second. Yeah, bro. Every Monday, bro.
Thanks, buddy.
Freddy. All right, guys. Well, welcome. I'm Crypto Man Ran. Smash that like button, subscribe to our channel, join the family, because, you know, if you do join the family, you become one of us. And if you are one of us, then we're going to give you a whole lot of giveaways, and you get a chance to get into the Banter Bags. And speaking of the Banter Bags, there is it's Colombian flu season again. The Fred tissues, Colombian flu. They know, bro. Everyone knows. Monday, you can keep them, Fred. I don't need them. You can keep them. You guys know. See, okay, so we do have another person or another company that's put some tokens in the Banter Bags. Jimmy, do we have the amazing slide of the new Banter Bags? Okay, so we've got a company called AAG Ventures. Now, this is something quite revolutionary in my mind. It is another gaming guild. They've got revolutionized this play to earn model, but they've also got this learn to earn model, which they're going to start doing with kids. So basically paying kids to learn. So gamification of subjects. I think, let me just have a look here. I think it's maths in the beginning. The world's first learn to earn platform applications will pay crypto for learning transferable skills, example, maths, program, and metaverse design. So for me, super exciting. They put $1,500 in the Banter Bags. Let's just see where the Banter Bags are right now. So there are a lot of things going into the Banter Bags, but you know, don't be fooled by the current value, because remember, when the market goes up, these Banter Bags are going to start flying. So I reckon we'll still get easily to a couple of $1 million before we give them away. And remember, when we get to 700,000 subscribers, that is when we're going to be giving those away, right?
Yeah.
Yeah. Okay. Cool. Fred, can I get you another tissue?
Dude.
And yeah, I can start the show. Is the Sheldon video up yet?
Take a few seconds. Seconds away. Worth away.
Let's watch the Sheldon video, and then let's start the show and talk about Bitcoin and bull markets and bear markets, because there's not much happening on the markets. And everyone's asking, like, bull markets.
Have you heard the news? What? With his finger on the pulse, it's like Sheldon knew.
click, click. When the sniper shoots, we got Sheldon on the chart, so we never lose. Enter the sniper, sharpshooter advisor. Enter the sniper, he marks the charts right. Enter the sniper, he's calling the cycles. So enter the sniper, click, click, click. Time to be dedicated, sniper mode is activated. Explosions in the market are in target, and Sheldon demonstrates. Mirror, mirror on the wall, Master Sheldon tell us all. We got Sheldon on the chart, so we never lose. Enter the sniper, sharpshooter advisor. Enter the sniper, he marks the charts right. Enter the sniper, he's calling the cycles. Enter the sniper, click, click. Enter the sniper. Enter the sniper.
Sheldino. I love that part.
Yeah.
It's great. Let us know in the comments what you think. I think it's wicked. I think that's exactly it. It's wicked. It's going to be a big, big, big tune. We'll upload it for you guys onto YouTube and onto Spotify, and we'll credit the guys that actually sent it to us so that you can see who they are. All right, let's get into the show for today. Freddie, are you again blowing your nose?
What are you talking about?
All right, let's get into serious business. So we're looking at Bitcoin. Bitcoin down now below $48,000, and that's on the back of something that's very strange. It's on the back of the fact that the stock markets are now at all-time highs. If you look at the S&P 500, which is a broad measure of where the US stock market is today, the S&P 500 is now officially just below its all-time high, but I think its daily close was the highest daily close that it has ever seen, which is kind of strange because if you look at that, it is on the background of the US publishing on Friday the highest inflation numbers that they have published in the last 48 years, since the 1940s, and over 40 years. So you've got inflation which came in at 6.8%. 6.8%. Like, you know what that means? It means that the last time inflation was this high was in the 1980s. There we go. It was in the 1980s. And even though Joe Biden prepared us for this, because he came out the day before the inflation numbers came out, and he said the inflation numbers will not show the reductions in the price of energy and gas. I think this is what he said over here. He said, let's have a look at it here. It says, White House says Friday's inflation data was taken in November. Since then, we've seen costs fall in some areas. The White House says gas prices are coming down from their peak. This wasn't captured in the data. So they're making excuses for how high the inflation numbers are. Now, this inflation number is getting super, super, super scary. If you look at where the US ranks in the world, so if you look at where the US's inflation numbers now rank as compared to the rest of the world, there it is. So you can see that the US is in places. Spain has a lower inflation than the United States. Ireland, Germany, even South Africa has a lower inflation than the United States. By the way, speaking of South Africa, I heard today that the Omicron virus has killed one person in the UK. Did you guys hear that?
No, I didn't.
Yeah. Let's quickly just check that out. Omicron kills one person. I think if you Google that in UK, you'll see. So now we can say officially that the Omicron is as lethal as Alec Baldwin.
Well, they say the numbers are possible.
Yeah, here it is. It's true. It says Omicron kills infected person in the UK. So that's where it is. Omicron has now killed one person. So is Alec Baldwin. So now it's Omicron 1, Alec Baldwin 1. Yeah. Okay. So the inflation numbers, super, super high, ranking the US with countries like, under this is Poland, Mexico, Russia, Brazil, Turkey, Argentina, and Venezuela. Those are the only countries that are above the US when it comes to inflation. But regardless of that, the stock market seems to be brushing this off, and the stock market is telling us that it wants to continue going up. Now, you'll remember that what we said is that up until now, the US has said that inflation has been transitory. And Charlie Biello says, Yellow on inflation, February, nothing to worry about, spend more. March, small and manageable. In May, it's only temporary. In June, could reach 3%, but it's still transitory. In October, it's higher, but just for the next several months. And in October, trillions more in spending will lower prices. In December, finally they accept the fact that it's not transitory. Finally, the US wakes up and says, you know what, this inflation that we thought is transitory, not transitory. And what we're getting now is we're getting everybody saying, all the people that said that inflation wasn't transitory are now saying that the inflation numbers are actually very, very wrong. So even though the US is admitting to a 6.8% inflation, we know that that's garbage. I don't know if you guys watch the All In podcast, and I keep saying to you guys, if you're not watching or if you're not subscribed to the All In podcast, this is a podcast where 4 billionaires meet for a conversation once a week. It's called the All In podcast. We actually help them get their numbers up over 110,000. Do it again. Subscribe to the All In podcast. But listen to what Shamat says on the All In podcast.
Let's just put a pin in that for a second. I think the thing that Sachs talked about is really important, which is that we have to really figure out whether inflation is transitory or it's persistent and it's here. And I just want to bring up, Nick, I'll send you these text, the Twitter links to this. But Bill Ackman tweeted out these two things today, which is that if you
fan of the pod,
brilliant investor, by the way, great human being, brilliant investor. Two very specific things. He actually called out something that we also mentioned before, which is that CPI is horribly calculated and it's really imprecise. And if you unpack CPI, there's something,
price index,
the consumer price index, there's something in there, a component of it that's very important, which is called the owner's equivalent rent, right? How much can somebody basically charge rent to other people? The way that they calculate that, which is 30% of the 30% of the calculation, is they just survey a handful of people. The problem is you don't need to survey because the actual exact data is available from single family rentals that report this number. So their survey showed basically a much, much smaller increase than what the actual increase is. And let me just give it. So the largest owners of nationwide single family rentals are reporting a 17% year over year rent increase.
Wow.
The OER that was calculated, quote unquote, by survey in the CPI was 3.5%. If you flow that through, it means that core CPI actually went from 4.9% today to actually 9%. And the CPI print, which was 6.8%, was actually 10.1%.
So if you look at the real inflation numbers, if you take that calculation into account, and I did verify it, I did go and look at this tweet. It's true. It's true. If you take those numbers, the actual CPI numbers are closer to 10.1%. And that is on the adjusted way of calculating the CPI. So bottom line is that the US is now in a huge mess. It's in a huge mess. It's got this rampant inflation. And the Fed, remember the Fed has two tasks. One is to keep inflation and prices stable. That's what they call keeping inflation stable. And the other thing is to keep employment high. So they're constantly juggling between keeping employment high and stimulating the economy and keeping the inflation low. Now, Powell was schooled last week. I don't know if you guys saw this, but Powell was roasted. He was roasted. Listen to this. This is good. This is really good.
I know you're aware of this because you were there. The money in circulation. And this comports with, again, going back to chapter 9 of Milton Friedman's book. And he goes in and talks about the inflation that took place in the 1970s. And he has a series of charts showing the supply of money. So here's the United States. And he goes on and shows the supply of money in Japan and the increase in prices. And then also the United Kingdom and Brazil. And so all of this is going to a very central point that when you increase money, and actually let me quote Mr. Friedman here for a second. When the quantity of money increases more rapidly than the quantity of goods and services available for purchase, we have inflation. You have printed too much money, sir, and that money has created inflation. To stop the inflation, I would recommend to you to stop printing the money. You indicated yesterday that you're going to start to slow down the printing of money. I think you should stop it, and stop it right now. Inflation is on the minds of Americans. Poll after poll for the last many months, 70, 80% of Americans, it's a top issue for them. They're concerned about inflation. inflation is eating away their purchasing power. It is actually robbing them of the increases in wages that we've seen because their purchasing power is down because of the inflation that's created by the money that's being printed. Would you like to respond to that?
Sure. So price stability is one of our two goals, the other being maximum employment. We have to balance those two goals when they're in tension as they are right now. But I assure you, we will use our tools to make sure that this high inflation we're experiencing does not become entrenched. If I may also add, though, the connection between monetary aggregates and either growth or inflation was very strong for a long, long time, which ended about 40 years ago. So the so-called velocity of money became quite variable. And so now we think more of just the imbalances between supply and demand in the real economy rather than monetary aggregates.
Making a whole lot of excuses for why they did not speculate or how they did not forecast the fact that we're going to get so much inflation, when to most people it was actually so obvious. It was so obvious. Yet they're starting to make more and more excuses. Now, part of what you heard there is that the US should stop spending. The US should stop increasing spend. They should stop increasing the money. And he's not the only guy that thinks this. If you listen to Elon Musk, and Elon Musk had an interview, and if you haven't watched this interview, you have to watch this interview with Elon Musk, and I think it was with the Wall Street Journal. He really is one of the smartest people. I think he's the smartest guy in the world. Listen to what he said in this interview. Okay, we have to listen to an advert. So watch the advert. What do you think of the new? Okay, let's try that.
Say tomorrow you get a phone call from Joe Biden and he says,
I think that's unlikely, but sure.
King Jong
he
Elon.
just gives you a call.
With his new
and
hairstyle.
says, I haven't been talking a lot about Tesla lately, but what do you need from this bill? What are your needs? What do you answer him?
Well, I to be totally frank, I don't know if at least no one at Tesla has actually brought up whether they care about this bill or not. I think if this bill happened or didn't happen, I don't know. We don't think about it at all, really.
Okay.
It might be better. Honestly, it might be better if the bill doesn't pass. Because we've spent so much money. It's like the federal budget deficit is insane.
What is the biggest improvement we can make to the U.S. infrastructure? What do you say?
I think we generally could have better airports, better highways, and I think that especially in cities that are congested, we've got to do something to deal with the extreme traffic, which I think is some combination of double-deckering freeways and building tunnels. Honestly, I would just can this whole bill. Don't pass it. That's my recommendation.
What about the support though for the charging network? I mean, there are parts of this bill. And no. No, I mean, do we need support for gas stations? We don't. So there's no need for this for support for a charging network. I would delete it. Delete. Okay. All right.
I'm literally saying get rid of all subsidies.
Well, there's some other good things in this bill that some would argue. I mean, a lot of money earmarked for R&D. Would you want to put that towards something?
No.
Okay. All right. We're going to move on from the bill because I think we get what you're saying on it.
In general, we should just, if we don't cut government spending, something really bad's going to happen. This is crazy. Our spending is so far in excess of revenue. It's insane.
That's exactly it. If we don't cut government spending, something very bad is going to happen. And you're getting this pull between Elon and Joe Biden.
This bill will reassure all the economic markets at home and around the world that we're going to continue to pay our debts when they're due. And that's what this is all about.
Paying the debts when they are due. And he just signed a bill to increase the debt limit in the United States so that they could continue to pay the bill. So you're getting this tug of war between the smartest person in the world. And I mean, he's so smart that Time Magazine has now named Elon Musk Person of the Year. I think he should be Person of the Century. I mean, if you think about what Elon Musk is actually doing, he's the leader in electric vehicles. He's the leader in solar. He's the leader in space travel. He's the world leader in traveling to Mars. He is working on traffic, solving traffic problems. He's working on free internet for everyone. He's now also launching the Tesla phone. Did you guys see the Tesla phone? The Tesla phone is the most insane phone that you've ever seen in your life. This guy is leading all of those charges. And I mean, he really does deserve this Person of the Year. He really does deserve this Person of the Year. Anyway, be that as it may, we've now got the Fed having to control this massive inflation that's coming out now. And there's a meeting with the Fed on Wednesday. And let's see what the market's actually expecting from this meeting on Wednesday. Let's look at what it says here. Oh, actually, I don't know if you guys saw Tim Draper's tweet. This is one of the best tweets of all time. He says, U.S. tax revenue is 2.170. The Fed budget is 3820. The new debt is 1650. The national debt is 19.7. What is that? Trillion. No, that's much more. Yeah, 19.7 trillion. Recent budget cuts, $38.5 billion. Now he says, now remove 8 zeros, and it's a home budget. So family income, 21,700. The money the family spent, 38,200. New debt on the credit card, 16,500. Outstanding balance on the credit card, 192,710. Total budget cut so far, $385. That's exactly the game that the US is playing. But nonetheless, the Fed's going to meet, and they're going to have their meeting on Wednesday, and they're going to do the press conference just after at around 2:30 p.m. We know that. And the consensus estimate here is that they're going to start tapering. They're going to start tapering, which means slowing down on the money that they put into the economy, between 10 and 20 billion per month, and that potentially signals for up to 3 rate hikes in 2022. The market is factoring in 3 rate hikes for 2022. So let's just have a look here. Liu Shangpeng says next week the FOMC meeting might have no impact or minimal impact on the stock market. Here's why. J. Powell communicated well ahead of the meeting an accelerated tapering ending in March already, which is already priced in. The accelerating tapering isn't an issue as the economy is strong and much money still available on the sidelines. True story. Surprise, if any, will be a rate hike acceleration, but this is unlikely given the remaining Omicron uncertainty and supply chain improvements. I suspect the post-FOMC market reaction to either be investors get relieved, stocks stay flat or go up, stocks initially fall down as investors digest the message, and then reverse back to up, and then a late Santa rally is still possible. So the market's priced this all in. The market's priced in all this inflation. The market's used to the fact that we've got all this inflation and that the Fed has to do its thing. The Fed has to start tapering now. The Fed has to start slowing down the economy to defend against all this inflation. That is just where we are in the market. And regardless of what's going on, the market's saying, look, we know this, and we're still at an all-time high. We know what's going on, but we're still at an all-time high. We are discounting all of this, and we're going into an all-time high. Now, the question is, if the markets are at an all-time high, and inflation is already factored into the market, then why is crypto going down? Why is crypto in a bear market? Is crypto in a bear market? That is the big question, because a lot of people are starting to talk about the crypto bear market. And today, what I want to do is I want to unravel this whole thing around bear markets and whether we're going into a bear market, whether we will ever see another crypto bear market again, just like the one that we saw in 2017 and in 2013, and the one that people that were around in 2013 and 2017 keep talking about, because that is where this whole narrative of a bear market comes from. It is from a whole lot of people, including myself, who were here in 2017 and some people who were here in 2013, and the bear market that we experienced. For those of you that weren't here, I'll take you on a little journey in history. I'm sure most of you were actually there, were around, but let's go back to 2017. And you can even go, I'll go back to 2017. I won't go back all the way to 2013. And okay, so we are in 2017. And as you can see in 2017, we had this huge bull market that went all the way up. And then we had this great correction or collapse. And that continued in a bear market for, I think we only got back on Bitcoin 2 years later. And so everyone talks about this potential crypto bear market. The discussion or the narrative in crypto is that you either have to be in a raging bull market, and when the raging bull market finishes, then you'll get into a bear market. And a lot of people have been talking about these market cycles. Let me just quickly find these for you guys. Here we go. So we got 2 questions on here. Let me show you this. You got 2 questions on many minds. Will the current Bitcoin halving cycle still yield similar relative returns to the previous 2 cycles, or will the future returns gradually diminish? Will this be the first Bitcoin halving cycle without an explicit blow off top? So everyone's kind of expecting this blow off top and then going into a long-term bear market. And I don't think that's the case. In fact, I think that the bull market is still very, very, very much intact, and that what we had now was just a healthy correction of the leverage. And I think that the market structure is still very much intact. Let's actually cross over to TechDev, because I know that he's got great views on whether this bull market's still intact. And then afterwards, we'll look at whether there is ever going to be another bear market, or whether we're going to get a bear market now. Let's get him on. Let's get him on. TechDev, how are you, my friend?
I'm doing great, Rand. How are you?
Fantastic, fantastic, fantastic. Man, I've been following your Twitter account, and every time I feel like I need some encouragement, I go to your Twitter account and I get reminded that we're still very, very, very much in a bull market.
Yeah, I appreciate it. It's great to know that I appreciate you following and keeping up. It's yeah, I mean, look, it's obviously it's a tough time for the market right now. Sentiment's probably as low as I can ever remember seeing it since I've been in on CT and crypto Twitter, and gauging sentiment. So it's definitely, I mean, most probably would say it doesn't feel like a bull market right now. What I've always tried to do is just let the data guide where I think we are, both present and historic. And I try, I certainly have a bullish bias right now. There's no hiding that. But in my opinion, that's coming from a probabilistic standpoint, looking at what I've seen from historical data and current data so far. And yeah, if you'd like, we can dive into some of the charts.
Let's dive into charts. Let's dive into charts and let's look at why you're so confident that we're still in a raging bull.
Right. So I guess I
want to share your screen. There's a share screen button.
Sure, there is. I thought I had clicked that. My bad. Oh, here it is. I was one click off. Okay, yeah. Let's jump in here.
Okay, there we go.
So yep. Let's go back and start with here. The first thing I'll say is, and this is something everyone has to keep in mind, is the market is all probability. And anyone who tells you they guarantee that it's a bull market, or they guarantee that it's a bear market, or that they guarantee they know what the definition of either of those two things are, it needs to be questioned. In my opinion, we have not significantly deviated still from a macro structure standpoint from what traditionally would count as a bull market, just higher highs and higher lows on a macro time frame. Nor have I think we deviated from some of the interesting landmarks and macro structure components of past cycles. So I can start with this chart here, and you've seen components of this on my Twitter feed. This is me looking at the past 2 halving cycles. Folks can debate, I think, where a cycle starts and where it ends. There's different definitions of that. What I'm looking at here are the past 2 bull runs that we had where there was a halving within it. So what you see, in my opinion, are some pretty key landmarks in the cycle. If you go back to the first one, you had this blow off top, before there was even a halving, when liquidity on Bitcoin was very low. This was near the 2011, And then this started what I would call the first cycle with a halving. This was your first halving that you ever had in Bitcoin, where the supply that's introduced into the system through the mining rewards gets cut in half. So after this blow off top, you come down, you make your first higher high. And what I'm looking at down here is an indicator, one of the ones that I'm using to gauge when the next either cycle top or local top might be, if in fact we just continue to have these big tops without a blow off top. Regardless, I think eventually we're going to see another touch of this top line here in this relative volatility index. So that's what I'm looking at down here, and I'm trying to match up what I think are these key landmarks. So you come down, you have your first higher high of the cycle. Then you have this front running of the halving that goes on, where investors bet that the price is going to go up before the halving happens. So you get this local rise in price, and you see that here in the indicator. Then you come up and you have your first, what I call the local top, which is your first touch at this critical level of the RVI. Then you come down and you bounce near this 1.272 Fibonacci level, which is taken from past cycle high to current cycle low. Then you come up and you have this next big resistance that comes near the intersection between this 1.618 level and the middle of this log regression band. And that's what you see here with this another local little peak in the RVI. And again, resistance here in the price structure. But then you end up pushing past eventually and getting up to this line once again with what I would call the cycle top. And we saw the same thing happen in the next cycle. You came down, you had your first higher high, price ran front running in front of the halving. You came up, you had your first local top where you hit up near this critical level, bounced near this 1.272, came back up, saw this resistance around this level, corresponding with this local high, and then eventually pushed past, saw your cycle top when you hit the level again. And if I look at, what's going on in this cycle, obviously it's different. History never repeats. In my opinion, we're still rhyming to a degree, where you had your first higher high, obviously had this C19 Black Swan event here, but you still had a front running of the halving. We came up, we had our local top right at the same Fibonacci level that you had in 2013, bounced off the same level that we saw in 2013. And now we've come up, and in my opinion, this is about where we are if we're still following traditional cycles, where you're having the same pullback, the same type of resistance at this intersection point, and the same sort of behavior here in the RVI. You're even finding support, I would argue, off this other curve of the log regression band, which is a 38.2% fib level, the same place where you saw support in the similar pullback of the last two cycles. This is around the 47K region. And, if we're going to continue rhyming, then at some point, whether it's the next few weeks or the next month or two, I would be looking for a final push past this key resistance level to eventually come back up and hit this critical level again. So what do you think caused this last correction? Are you one of these people that say that, look, we were just over leveraged, and when you have a system with too much leverage, the leverage has to start coming down, and now we're correcting, and it's exactly the same as May and September, where the weekends are getting flushed out, and then we'll just continue to get confidence into the market, and as we gain more confidence in the market, we will get more momentum in the market, and that will start the next bull rally, so to speak. Yeah, that's a good question. I mean, look, I didn't see a dip of this magnitude coming. That's my fault, I suppose. I know some others did, so kudos to them. When I look at did leverage cause the correction? I don't know. My belief is that leverage's role in today's market adds to the volatility of the market, and it adds to the wicks that you tend to see at the bottoms of these corrections or at the tops of these pumps. But the candle closes, especially on the higher time frames like the weekly, I think is most important what to pay attention to. And it can be easy to blame leverage on every correction. I still think it's more just natural market structure. And
so it's funny because I think what we're doing here is you're looking strictly at the charts, and your charts are dictating to you where the next move is going to be. I'm trying to take the charts and I'm combining the charts with the on-chain data, the market data, the leverage data, and I think that's the combination here. So you're looking at, you saying, look, we needed to have a correction. I'm saying the cause of the correction was actually the leverage.
It certainly could contribute to it. I mean, you had a lot of the folks that were looking at the open interest and the leverage in the market, and we're saying we need a flush. And I don't think the two are mutually exclusive. I think the two go hand in hand, the charts and the on-chain and the leverage data. Chicken or egg thing, I guess you could say, which causes which, right? But certainly, yeah, I think a lot of the important market insights come from looking at the technical data in the charts. And I think
let's look at the two key levels that you're looking for. So let's look at the level that you're saying, if we break below this level, then my thesis changes. What is that level?
Right. That's a good question. So let's jump ahead and look at those, what I would say are the invalidation points. These were the four key ones for me, and they're kind of in order of severity. This first one, closing a week below the 20-week simple moving average, would have been a first point of concern for me, and we've done that. The next three we've not yet done, and they're would kind of be an increasing order of concern. So this one would give me more concern that maybe we're in for some longer term downside or even some extended sideways choppiness. And these next two then would be, at least midterm points to flip bearish, to say, look, we've now really deviated from not only conventional bull market structure, but from past cycles. And we can probably expect some more downside or some longer sideways consolidation. So I can go to the chart here and look at these two things. This is usually these two or three, I guess, weekly moving averages. Benjamin Cohen looks a lot at this bull market support band as well as the 50-week simple moving average. So there are two good things to keep in mind. I would argue that in this cycle, the 50-week SMA has served a lot more as the support line than in past cycles. Never in past cycles did we close below the support band twice. We've done it now twice, but we're living in this kind of in-between space between the support band and the 50-week SMA. So if we were to close, I'm sorry, why does that keep happening? If we were to close a week below this 50-week SMA, significantly below, then that would be more concern for me, that we could be looking at more downside. You can see down here in the June-July correction, we came right up to it. We closed just barely below it a couple times, and we bounced off. So that's what I'm expecting to see here. But if we went below and closed several weeks significantly below, then we're probably in some new territory. And this is the other big one here. If we do that, then we're already approaching this other invalidation point, which is losing this macro higher low structure. If we were to close weeks below our previous swing low down here, then that's going to be another invalidation point in my opinion of this current bull trend that I still believe that we're in. The last one is then something that I started to develop to try to confirm when the next bear trend might start. I didn't expect to need to use it so soon, but I'm looking at it now. This is what I call the 2-week RSI floor, where you have these in the 2-week chart. You look at the the first dip that we had after our first higher high in the cycle, and to me that sets this key level in the 2-week RSI, the relative strength index. Historically, when we've closed weeks below that level, that has signaled the start of a bear trend. You can see down here in the July low, this floor is right underneath 49. We closed right above 49 before bouncing up. Now we're sitting here in the low 50s. So, I think those other two points that I mentioned will probably trigger before this one. By the time we get down here, we're probably going to be breaking that lower low or that higher low structure anyway. But this would be another point of real confirmation that if we see RSI go down below this level, we're probably due for some more downside or some sideways action. I will say this, though, in that if this does happen, it is complete uncharted territory for past cycles. I mean, never would we have engaged any of these criteria without first reaching all those other top indicators that we look at all the time, both price and on-chain. So I would maybe take a little comfort in thinking that, well, if the bull trend deviated from all history, you might expect the same for the bear trend. And having a year of downside with, you know, an 85% drop from the top without having that blow off catalyst, I would find really unlikely. So that's what I'm thinking.
I guess I do find that unlikely, but I do have another thesis in terms of how long, if we did get a bear market, how long the bear market would last and what would lead it. And I'm going to talk about that in a few seconds. What I love is the way that you've laid this down and said, you know, there's 4 things. One of them has been ticked off the list, and now there's 3 others. And if those happen, then this chart's completely invalidated, and then we've got to go into plan. What are we going into? Plan D now. Plan D or Plan E.
Something like that. Yeah.
Yeah. Okay. So let's say the following. First of all, where can people follow you? What's the best place for people to follow you to get an update on whether these things are actually happening?
Sure. Yeah, I'm most active on Twitter. I'm not on any other platforms. So if you're out there and you're getting contacted by folks on Telegram or Instagram with my handle, that's not me. Plenty of scammers out there, so be careful. I'm only on Twitter at TechDev_52.
I think we mentioned. Go and follow TechDev. I see that there's only 287,200 of you that are following him, and I know we've got 500,000 subscribers in our YouTube channel. That means that at least another 200 and something thousand of you must go and follow him, because if you're not following him, guys, you're making a huge mistake. Huge mistake. So go and follow him on Twitter. Also, you do a newsletter, right?
I do. Yeah, we mentioned that last time. So yeah, twice a week I write a newsletter. On Mondays, I do a brief update on what I call the Bitcoin top gauge, which is supposed to come close to identifying where the top might be. And I also, you know, recently, especially with this downtrend, I try to talk about some other things that I'm looking at on the chart. And on Thursday, I do a full issue where we dive further into the Bitcoin price chart and also look at some altcoin targets and altcoin market health, although people are less interested in that now when they're concerned about a bear market. So but yes, newsletter is something that comes out twice a week for folks that want some more detail on the updates.
All right, listen, buddy, it's been unbelievable having you on the show again. I must say, I love your charting. It's just so logical and clear, and that's it. It's just the easiest, logical, clear, simple, and to the point. Guys, go and follow TechDev. He's part of the Banter fan, guys.
Thanks so much, Ray.
Thank you, my friend.
All right, till next time.
Thank you. If you're not following him, guys, if you're not following him, just go and follow him. Go and follow him. I mean, where else do you get TA that is so crispy clear? Where else? Fred, did you sneeze again?
No.
Everyone saw, everyone heard that people were commenting about it. Yeah. So he did say that, you know, if we did break those 4 points, then we could go into this uncharted territory. And if we did go into uncharted territory, no one could tell you how long the bear market was going to last and whether we were going to get a blow off top. And I think in a way, we actually are already in uncharted territory. And the reason why I say that is because I think that in 2013 and 2017, the bull markets were led specifically by speculators. They were led by people who came here to take a bet on the future of this technology. But I think the 2021 bull market is a very different bull market. I think in the 2021 bull market, you've got 2 forces at play. You've got Bitcoin as an inflation hedge, which it wasn't in 2017. It was a potential solution for if we ever needed an inflation hedge. So it was like this theoretical what if type thing that nobody actually believed in. And then you've got this other narrative, which is blockchain technology disrupting the world. So you've got these 2 new narratives in 2021, which weren't around in 2013 and in 2017. And when people talk about 2013 and 2017, they talk about people taking speculative bets on whether this new technology would actually ever have a use case, and what would the use case actually be. That's the difference between 2013 and 2017 lumped on the one side to 2021 on the other side. 2013, 2017, no one really needs the technology. I mean, it's cool to have non-government money that's decentralized, but you don't really need it in 2017. It's only in 2021 when the governments really started to print money that you said to yourself, hold on a second, I need to tap out of the system. I need to check out of the system. And the only way to check out of the system is to get in on Bitcoin. And then you've got all the other blockchain disruptions that are starting to happen. You've got DeFi, you've got NFTs and everything else. And so I think that this market is a very, very, very different market. And I'm not the only one who thinks that. In fact, if you look at this tweet that Samani published, he said, why the next bear market will not be like the last one. And in fact, we may not have a bear market at all, or we may have half a bear market, depending on your perspective, a thread. Now, usually when people say a thread, I hate it, bro, because it just means that, like, okay, half an hour of like scrolling through this, like a thread. Okay, so he says, broadly speaking, there are two types of cohorts in crypto. There's the money cohort and there's a tech cohort. The zeitgeist of the space was dominated by the money people from 2011 to 2017. They were speculators trying to make money in crypto. A good bit of fighting in 2017 and 2018 was about the money camp grasping for power and relevance. Today, it's fairly clear that tech crypto dominates the zeitgeist. There are still lots of people who think about Bitcoin as an inflation hedge, but they represent an increasingly smaller percentage of press, social media, and conference speaking. Money crypto people think primarily about interest rates, the politicization. How do you say that word? Politicization of central banks. Tech people care about building. Okay? Inevitably, politicians, CBs, central banks will do their stuff that is bad for Bitcoin as an inflation hedge, whether that's banning it or trying to just raise rates. There is a natural ebb and flow of these actions of institutions, and Bitcoin USD will actually respond to it. So what he's basically saying is, look, governments will taper, they will increase inflation, they will decrease inflation, and Bitcoin, because Bitcoin already works, and because Bitcoin is just a tool to hedge against inflation, well, Bitcoin USD will respond to it. The price of Bitcoin will respond to it as measured in USD. But tech people don't actually care about that stuff. They just want to build cool things. And what he's saying is if the Bitcoin USD price goes down by 50% because governments have these certain actions, there's no real reason why that should impact the people that are building or phase investors who investing in tech crypto. Obviously, there are emotions, but directionally, this stands. Consider the SaaS bear market of 2018. Did SaaS builders slow down? No. Did venture capital in SaaS companies slow down? No. What he's saying is that there is a decoupling between Bitcoin, which is one use of the technology of blockchain, and a use case that actually works, and then the technology of blockchain, which is creating so many more disruptions out there. He says, it is possible that crypto is still a few years too early from truly breaking into mainstream, but I think at this point, that no longer matters. The train has left the station. All the tech builders and investors have underwritten tech crypto as having meaningful probability of reshaping commerce, finance, and the fabric of the large society as a whole. And they are comfortable meeting on that and holding it for years. There is a huge amount of capital out there that will never believe in Bitcoin because they don't believe in owning non-productive assets. There isn't a single investor in the world that doesn't believe that software isn't going to eat the world. Over the next 5 years, every pool of capital around the world will be buying crypto. 100% of them will invest in the tech, but less than 100% of them will invest in the money of crypto or the inflation hedge. This is where he puts in his shield. He goes, this is why I expect Solana and ETH to substantially outperform Bitcoin through the next bear market. The tech money doesn't care about the macro. They just want to be long the stuff that they think is going to change the world. A small percentage of capital in the world is non-productive, fiat cash, gold. Public and private equity debt and real estate are at least 100 times larger. The world actually does not care about non-productive assets. They want productive assets. Now, so what he's saying is instead of taking this whole blockchain narrative and saying it's all about Bitcoin, break it up into productive and non-productive assets. And whereas some people want to invest in crypto as an inflation hedge, some people want to just invest in the tech, okay? And so he says it is fair to argue that Sol and ETH are not productive. They certainly have meaningful differences, but I think that everyone knows that the software that is eating the world will cause them to buy Sol and ETH, even if they are not strictly productive in the way that equities, debts, and real estate are productive. The transformation in society has been too large to ignore. Everyone wants to be along the next big tech wave, and crypto is credibly one of those big tech waves. And yes, I do expect BTC will get flipped in the medium term. As the tidal wave of tech money enters the space, it will crowd out the macro money. Once Bitcoin is flipped, it's pretty much game over for Bitcoin. The large part of the value proposition of Bitcoin is that it's the largest and most liquid. Once those stop being true, it has less to offer. As people recognize this is becoming true, a lot of money in BTC will rotate out into Sol and ETH and move into productive names. So in summary, the next bear market will not look like the last. More likely that tech crypto goes through more short-lived 2018 SaaS bear markets, which is what we have been seeing. The decoupling is getting real. When Bitcoin gets flipped, that is when things get really interesting. So he's breaking up this, he's decoupling this tech investment from this store of value investment. And he's going, look, since the store of value, Bitcoin, is already working, people have invested in it. But as the software narrative starts to eat up the world, and Bitcoin and blockchain starts to disrupt so many more industries, not just gold and store of value, but every other industry in the world, then the narrative actually becomes spending money or investing in these more productive assets, or actually investing in software. Now, when you invest in Bitcoin, you don't really feel like you're investing in software. When you're investing in ETH or Solana, you kind of feel like you're investing in software. And software is actually taking over the world. So how do the Bitcoin maxis respond to this? I mean, this is the funniest part in the whole world. This is the funniest thing in the whole world. So Peter McCormack. Okay, Peter McCormack. I mean, you compare Peter McCormack's intellect to Kyle Samani's intellect. You can't. You just simply cannot compare it. The whole thread, he goes, the whole thread is a dishonest sales pitch for what Kyle wants. It is well understood that those who start threads with a 0 have a small penis and can't be trusted. I mean, Kyle is a cock. Bitcoin's value proposition is decentralization, something that none of his shitcoin investments have. Kyle can't make returns on Bitcoin like he can with his insider pre-sale centralized shitcoin deals. Jog on, Kyle, you lying spineless melt. These Bitcoin maxis are becoming more and more and more toxic. More and more and more toxic. And it is because Bitcoin is getting eaten by Solana and Ethereum. It's a matter of time before they take it. They take this. It's a matter of time before it becomes irrelevant. Okay, so now our producer. So Kyledoops. That's Kyle. Kyledoops.
Back again.
So he writes this thread, and I think it's a very, very good thread. And I also thought I'd give his Twitter a punt, because the last time he had 100 followers and he got 3,109 followers. But this was actually a very, very, very smart thread, which goes on from what Kyle was saying. He says, crypto adoption curve measured against some other important technologies. Why the prolonged 80% bear market may be a thing of the past. Mass adoption of the internet began in 94. Crypto adoption rate is higher than the internet. So he compares the mass adoption rates of technologies. And then he says, if you look at the growth of Bitcoin versus the internet, look how much quicker Bitcoin has reached 1 billion users. And that is because Bitcoin had the internet to drive its adoption, which the internet didn't have. But if you look at Ethereum versus Bitcoin, Ethereum is growing much faster than Bitcoin. If you drew this chart and you said Ethereum plus Solana plus Avalanche, because that's actually software versus store of value, then imagine how much faster and how much more parabolic this chart would start to go. And then he looks at the adoption of Ethereum versus Bitcoin, talks about institutions and countries just starting to invest in it. And so he concludes and says that we may never have another one of these bear markets because of this technology adoption, which is exactly what Kyle Samani is saying. What this means is we could see many bear markets and bull markets happening across the board of 6,000 plus cryptocurrencies, and various ecosystems may break away from each other, no longer moving in unison with the 4-year cycle. So Bitcoin is a store of value with an emission schedule, which is causing it to move in a certain 4-year cycle. But Ethereum has got nothing to do with that store of value. It's not an inflation hedge, and it's a software technology. And if you start looking at the market like that, then what you'll realize is that if you can identify the narratives and you can invest in the right software for the narratives, that is where you'll actually make a lot of money. And so I'm going to show you one more tweet before we go. And this tweet is from Zaheer, SplitCapital. It says there's been a lot of talk of froth in the market, but something a lot of people are forgetting is that isolated parts of the market are getting absolutely destroyed. These are these mini bear markets within certain narratives in the market. So between, here we go, DeFi is down 50% since May. Even today, DeFi is down 50% against ETH since May. NFT volumes have actually absolutely been destroyed. And if you look at the floor value of punks, the floor value has fallen from 100 ETH down to 68 ETH. So effectively what he's saying is, if you're following a narrative closely, you'll realize that DeFi has actually been going down for a while. NFTs have also actually been going down for a while. Meme coins, I love that he puts Cardano as a meme coin. Okay. He says meme coins are also going down 55% since May. Solana ecosystem, which garnered a lot of attention in the past, is also down 50% since September, okay? And the dinosaur coins, the 2017 coins that never made it, are another market that has been absolutely massacred. But what he's saying here is that if you are smart, you will identify the narratives, the next narratives that you think are going to win, and you can also buy the narratives that were in favor and have now fallen out of favor. Like, if you look at this, you may say, hold on a second. If DeFi is down minus 50% against ETH, then maybe now is a good time to be getting yourself into DeFi. If NFTs, let's not talk about meme coins, if Solana is down 50% since September, then now may be a good time to be getting into Solana. And so if you look at the market as a whole and you take Bitcoin, which is just a store of value, and you say, well, Bitcoin is crypto, then you've taken a store of value, one use of the technology, and you've compared it to all the different markets that crypto as a software is going to disrupt. And so what you're saying is, because the store of value is down because of its 4-year supply cycles and emissions and whatever else, then you shouldn't be investing in software. And that just doesn't make sense. So identify the narrative and buy the coins in the narrative. And then it's like Suzu says, he says, every coin, here, I'll read it to you. Every coin sold is finding a safer home this month. 4 sellers are distributing into patient long-term buyers who actually believe in the narrative. Exactly. The people that actually believe in the narrative. So if you believe in the software narrative, buy Ethereum and Solana. If you believe in the inflation narrative, buy Bitcoin. If you believe in the NFT narrative, Ethereum and Solana. If you believe in the meme coin narrative, then buy, I'm not going to say it. I'm not going to say Cardano. I'm not going to say it. Because it's not a meme coin. It's a layer 1, and in January, Cardano is going to have the time of his life. It's a great investment. I'll see you guys again tomorrow for Sheldino Tentino's show, and then I'll see you again for another show later on. And remember, tonight we've actually got a show with Hustle. We've got another show today with Hustle, in the game with Hustle. If you don't watch that, you're missing out on serious alpha. I may actually even join him tonight because I love that guy. He's so good. He's so good. I'll see you guys again later. Until then, trade well, my friends. So much for doing shorter shows. It's a meme. Shorter shows are a meme.